The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
An automaker and an auto-related stock in the growth and income category are what we're going to talk about right now. Both, by the way, yielding very, very good dividends. Our editor of Zacks Income Investor, Nina Mishra, is here to fill us in on all the details. Let's take the auto-related company first, and that's Garmin, typically known for their navigation systems.
Yeah, so Garmin was primarily a maker of navigation systems for cars, boats, and airplanes. But over the last few years, the market for car-specific navigation systems has slowed down because most people use their smartphones for GPS. So the company has been expanding into outdoor and fitness wearables. So their focus on innovation and diversification continues to drive growth for them. So while the revenues from the auto segment have been slowing down, revenues from outdoor and fitness wearables segments have been going up. They reported last week excellent results, beating on both the top and bottom lines, and they also raised their guidance for the current year due to strong results. So if you look at detailed estimates page, you can see the big beat over there. And in fact, they have a pretty good history at beating estimates. The average positive surprise for the last 4 quarters is almost 36%. And you can see that analysts have been really bullish on the stock after earnings. They have been raising their estimates for the company after the big beat. It's over here. It's Zacks rank number 1 stock now because of these recent estimates revisions with a VGM score of B. And as you mentioned, the dividend yield is pretty good at
4.2%.
4.2%.
Yeah, nothing to sneeze at.
Yeah.
All right, then the automaker is GM.
Yes. So GM also reported last week excellent results again. The earnings more than doubled year over year, and revenues were up about 10% year over year due to strong truck sales in the US and also continued sales growth in China. And GM also has been investing a lot in innovative technologies because the future of transportation is changing with self-driving cars and ride-sharing services and all that. Earlier this year, they bought Cruise Automation for about $1 billion. It's a self-driving car technology startup. They have invested in Lyft, which is a ride-sharing service, and they also have a car sharing service. So with all that, they are preparing to launch their own self-driving car. Recently, they partnered with IBM for their artificial intelligence technologies. So IBM's Watson will make GM's car smarter.
Well, it won at Jeopardy, we know that.
Yeah, it did. So you can see that analysts have been quite bullish on the stock. They have been raising their estimates for the stock after this big earnings beat. And these rising estimates sent the stock to a Zacks rank number 1. It also has a VGM score of A, and it is trading at about 5.24 times forward earnings. I think it's really cheap. So the stock is worth a look because it's top Zacks rank, dividend yield exceeding 4.8%, VGM rank of A. So despite all these peak auto sales and Brexit-related concerns, I think GM
still worth a peek.
It's definitely worth a look.
Okay, and so they're both these companies are Zacks ranked number 1s as of today, November the 2nd, when we're talking about them, in case people watching out in syndication land and they watch this after the fact, and if the rank changes, then they'll wonder Well, what are they talking about? So that's why. Do you own either of these?
Yes, I own GM in the Income Investor Service.
Oh, okay. Okay, very good. Thanks for that. Don't forget, you can read more about these two companies, look at more data on these two companies, and other stocks as well if you go over to Zacks.com. And if you're not there watching this video, get on over to the homepage, because there is where you can link to it all from. With Nina, I'm Terry Ruffalo.